What is up, traders? It is Adam at SwissMade Trades on Twitter or swissmadetrades@gmail.com if you have any questions. Here's another weekly recap for the S&P 500. Going to look at some charts and kind of just go over some thoughts as we come to the end of January and as we head into the first FOMC meeting of the year. So looking at the weekly chart here, and I believe last week I said I noticed how we were, or remarked on how we were going into the weekly cloud, and we found support as expected based on the cloud and based on the, this is my wacky RSI, came to a level where we've bounced from previously. But from this chart, you can see we've broken through last year's lows, even broke through the October 2014 low, but we found support almost to the tick where we found support in April of 2014, right around 1804, 1803, and that lined up almost perfectly with the bottom of the cloud. Didn't quite get there, but nothing's gonna work out perfectly every time, as you should know by now. So I kind of wanted to start with the longer term charts and kind of just go in instead of what we usually do is we start with the tick charts and then move out. So, second. So we have the daily chart, and as you can see, we bounced the past couple days, Thursday and Friday. We had a short week, remember. So Thursday and Friday we had a couple green days, and one thing that I said that I've been saying in the past couple weeks, both in chat and in the videos, I believe at least, is that, and ignore this teal line, it's just open interest or something, is that once you break through a cloud, regardless of which direction, you would expect a retest. So I remember when we broke through this, I was like, okay, now we could still fall down here, and we would seek support, which we found based on the weekly cloud and previous price action. But I wouldn't be surprised to see a retracement of the cloud. Now, what does that mean, a retracement of the cloud? So we broke through the cloud, found support, bounced quite a bit, about 100 points within these 3 days. So what we'd kind of be looking for, at least on this daily chart, is a retest of both the Kijun-sen and the cloud itself. Now, am I saying it has to go right up to the top of the cloud? No. Would that be ideal to get short? The hell yes. But at least some sort of retest in the cloud, it would be expected just based on the cloud and rules of the cloud and just market behavior in general. So what we essentially did is we fell from 2100 to 1800, 300 points, and we've made up about 100 of it so far. Now, if we make up another 100, we would be right here at 2000, and that would be a point maybe where you start thinking about some longer term puts with a stop up here. And if it gets all the way up here, then obviously you short that. You have a great risk profile. Give yourself a couple points outside the cloud since it's based off the daily, but you would use the intraday chart to more gauge the price action. But you would use this chart to be like, okay, these are some targets I have, and if it gets here, then a short starts looking interesting. So yeah, we broke through. We made new lows, and many people say this is the first sign of a bear market. We had this double bottom, failed breakouts, made several double tops and whatnot, and then now we're making quote unquote new lows. Go back to the weekly chart. If we retrace the daily cloud and then continue lower, we're looking at this cloud again, and then we're looking at all these same support levels to see if they hold up, yet again. But if they don't, we just start looking. You would start looking at previous support places for the market, and you just start saying, hey, maybe we'll find support here. Maybe we'll find support down here, and as each one just gets knocked out, you just have to kind of move down the line. But right now we do have some strength, and we are bouncing off this weekly cloud, which is at least encouraging. It was expected So nothing too surprising there at all if you're using the cloud. And now, after several weeks of straight red, you could be fully committed to bull or bear if you want to. Do I recommend that? No. What I try to teach or what I try to show you is that price doesn't move in a straight line, so you can't just think in a straight line. You can't just be like, okay, we're down 300 points, so we're gonna go down another 300. We're not in full panic mode, and price action so far has been orderly. It's been more volatile. I'll give you that. These wild swings up and down are happening a lot faster than we've seen in the past 2 years up until this point. So for trading, that's great. For passive investors, it's not so great. But I'm a trader, so I'm loving it. I mean, you don't have to wait as long for moves. You get drastic moves to either direction. Is this common bull market behavior? Definitely not. And but it's still early. Still too early to tell. Are we in a full-on bear market? No. My opinion, once this weekly cloud breaks, if it breaks, I'm not saying it will, although we are showing some cracks, but we've shown cracks before, and we've rallied. But once this weekly cloud breaks, you start looking for support just based on the cloud, and 1600 becomes your first target, just based on cloud technicals, not even looking at price action, just based on the cloud. And so that's my primary target if and when we break through the weekly cloud. Let's go back to the daily cloud. That's where we left off. So kind of expecting at some point to see a retest here. FOMC will probably have an impact on that. I believe the last thing I heard, at least, was that they were expecting a March rate hike. But and one thing that's really disappointing for me is that the Fed mentioned late last year that they didn't want to raise rates because the stock market was down, which I don't think the Fed should make decisions based on the stock market at all. It should be based on economic indicators, which they try to say it is, but then they come out and say that they didn't want to raise rates because the market was down. So what they should have done was raised rates into all this. They should have sold into strength, really, instead of into severe weakness. But the Fed, I can't remember the last time the Fed did anything quote unquote right. So expectations should be low for the Fed doing anything as it should be done. But anyways, looking forward the daily cloud to be retested, just based on what we would expect from the cloud and technicals in general, and the way the market kind of moves. It took a while for us to retest this cloud, but when we did, we failed. I'm not saying we'll break through here or we won't. We just have to wait and see. But the expectation is that at some point we will retest the cloud, and we can see that the future is actually twisted bearish. So if you needed any more confirmation that the past few weeks were down, there it is. So let's go ahead and go to the 4-hour. So the 4-hour chart is still we're still underneath the cloud, still a thick bearish cloud. One thing I will say that gives the bears some hope is that we are above the Kijun-sen, which we haven't seen the Kijun-sen in 2 weeks, 3 weeks. We haven't even come close to it. I mentioned that in the last video too, how we hadn't even come close to the 4-hour Kijun-sen. So it was really, really strong downtrend, if that wasn't already obvious to you already. But the Kijun-sen and the Tenkan-sen are pretty flat. So just based on this, the 4-hour, based on this chart, the trend right now isn't necessarily strong on longer time frames, at least for the bulls. Let's look at the Tenkan-sen and the Kijun-sen, so flat. So no real trend right now based on these past 3 days. No real momentum in the move based on these being flat. So let's go to the 1-hour. It's the 1-hour chart. And I've drawn this channel every single video for the past 2 weeks, I think. It's this channel that's been here. and it actually nailed the bottom and the top. So we have one touch here, second touch, and a third touch. We actually nailed the high of the day in the room thanks to this touch right here. Got short all up in here. We had 3 chances to get short actually. Not sure if anybody took that, but it was called out in the chat room. And this was drawn before this even happened. This was drawn last week also, so no real reason not to have this on your chart. And the same level also called the bottom of this entire move, almost to the tick. So not too shabby for a simple channel. I don't use crazy patterns or anything. Channels, the cloud, double, triple tops, bottoms. Keep it simple, and it works for me. The more I know, some people out there use 5, 10, 12 indicators. MACD, slow stochastics, fast stochastics, and they'll wait for all of them to give confirmation for a trade. And in my opinion, that's just analysis paralysis, because you'll be sitting there looking at all these lines, and you'll be like, oh man, but this one indicator is telling me that it's not ready yet. So I try to keep it as simple as possible. And if you have a system that's consistent, the simpler you can keep it, the better. Always. That will always be the case. So enough about this awesome channel. It has been broken. Broke through the channel on Friday after bouncing on Thursday and Tuesday morning. So what do you expect after a channel break? And also we broke through the 1 hour cloud. So what you would expect, what you would be looking for, is for this to retest the channel and the cloud at some point. I'm not saying it's going to go in a straight line down. It could, flirt up here and then, retest the cloud over here. But I think it's interesting that this channel and this cloud, line up. So this is an area that I'll be interested in, if we get there to grab, to go long, see if, wait for confirmation that this is an area of interest where buyers step in, because you have 2 things telling you here, like, hey, this is an area to watch based on, once you break a channel, you would expect a channel retest before going higher, as I've said many times whenever I talk about spiking channels. And also when you break a cloud, you expect at some point, sometimes it's very soon, sometimes it's a day, 2 days, a week later, but you would expect price to retest the cloud once you break through it, whether down or up out through it. And the future cloud is bullish, but the real confirmation you're looking for is a retest to show that this will act as support. And even on the 1 hour, the Tenkan-Sen and the Kijun-Sen fairly flat. Tenkan-Sen's kind of flirting up a little bit, but I actually noticed the Chikou span is actually peaking up slightly over the cloud. So if you want to use the Chikou span as another indicator in the cloud, which is totally fine, I don't think that's overcomplicating things at all. It's already there if you use the cloud anyway. So you could say that maybe this isn't satisfactory enough for you to say like this is officially bullish now, because it's above it, but it's not really, So there's some thoughts on the channel breaking and the cloud breaking on the 1 hour cloud. If we go into what I use to day trade, the 2500 tick chart, ignore this teal line. Channels drawn on time-based charts always show up completely randomly on tick charts. So here we have Monday. Since it's a tick chart, Monday's trading session is signified by 8 candles because it was a short day. Good thing about futures though, if you wanted to trade on Monday, you could have. There was barely any volume. Obviously, there was barely any trading that actually happened, but you could have gotten your trading fix, so to speak. Although I don't recommend just boredom trading. But there's that. So Monday, we made the high of the week. Well, Tuesday morning, I guess. Spiked down. You would imagine that this cloud was green in the past. One day, I'll convince TOS to hold more than 5 days of tick data, so my 2500 tick clouds will be complete, but what can you do? Maybe if they raise commissions to $15 a trade on stocks and options, they'll do it, but I doubt it. So we clearly broke through here and then retested a cloud. And you can imagine the cloud, right? I mean, I hope so. Just kind of extend it that way, and you can imagine the cloud, trust me. If not, then we clearly tested the cloud here. We had confirmation that this was going lower, 2 times right here. And then we had just the big push down. 100 points, 103 points from here to here in a matter of a day, really. A day and a half, actually. You had a chance to get short. Now, this is a strong downtrend. Clearly, this is a strong downtrend. So when you see this big spike down, you're expecting, you're looking for a short at the Kijun-sen. I got short right here. And I grabbed some more shorts here. My stop loss was up here. And I just wrote this down. I think I covered around here, and then I wanted to get short up here, but I didn't get up there, so then I kind of just let that happen. I kind of missed out on that, but can't complain, right? Then what we saw on Wednesday was this beautiful little double bottom. I called this in chat. I was like, okay, we have a double bottom attempt, and we had some nice responsive buying off of the second bottom, and then we found support off of where the double bottom found resistance. So the middle of the W, right? That's an area of interest in any double bottom. So we found support where we previously found resistance in the double bottom. So when I saw that, I was like, okay, this kind of has a chance to test the cloud here a little bit, and it ended up doing that exactly. I actually got short here and covered down here. I think I got like 8 or 9 points just based off that, in and out. Which is not bad considering we had a tremendous rally, a pretty decent rally at least off the 1804 lows. So I caught a short in the middle of a bullish move, just based off of the cloud. So not bad at all. I'll take it. Held the Kijun-sen, double bottomed off the Kijun-sen, and then in the overnight session got an even better double bottom off of the cloud. I got long right here. I missed this one, and I saw it fail the Kijun. I was like, okay, maybe I'll get another chance here, and I did. And I covered right around here just because I was tired. And my first target was the top of the cloud, covered around the Kijun-sen. I'm not going to be greedy, especially in the overnight session. So into Thursday, we can see just based off of this price action right here, that we kind of got into a little bit of a choppy trend, some sideways action, and what happens then is that the cloud in the future starts to become a little less reliable. I think I mentioned that in either last week or the week before, the video either last week or the week before. So we had price respect the cloud here. Then it started just not necessarily disrespecting it, but not respecting it as much, at least on the bottom end here. So after this, I tried to get long here, stopped out for a small loss. Try to get long here, small loss, and at this point I was like, okay, this is chopped, and there's no point playing off the cloud right now because I'm just gonna get chopped out of every position, which I'd already done twice. So kept my winnings from here. A couple small losses, not a bad day at all. You're not always going to have 5 trades. You're not even going to always have 3 trades, and if you do, they're not necessarily going to all be winners. But if you manage them correctly, you can still have a winning day, even if you have 2 losers and 1 winner, and that's what my Thursday was like. So not too bad. And then Friday, I didn't really get an opportunity to trade any of this. I believe Friday is when we decided that we were going to break through the cloud, and at this point I'm waiting for a retest of the 1 hour after a retest of the 2500 tick cloud. We kind of just drifted along here, so no real opportunities to make a trade, in my opinion, unless you got long here or something like that. So Friday I didn't place any trades. I kind of took the day off. I glanced on my phone to see if price, got into the cloud at all, but it didn't. So I had to give myself a 3-day weekend, which I ended up regretting because I was kind of bored. So I was just kind of talk about some stuff aside from technicals. We're wrapping up January, and one thing that one sort of seasonal thing we look for in January is it's called the January effect, and that actually usually starts with the whole Santa rally. And what that is small caps especially they start getting a lot of love, a lot of bullish movements. And if we look at the Russell, um, not exactly bullish. This is the Russell 2000 future TF, and let's look at the Dow. Hide all these. The Dow has actually not yet broken the August low, so that's interesting. And one thing you can definitely do, and I encourage you to do, is look at the other markets and see how they are interacting with the cloud. Probably one of the best things I've ever done was based off of looking at all of the different markets on the daily, their daily charts, and getting out of all of my stock positions, all of my long-term portfolio stock positions based on right here. I noticed that the Dow was busting out of the daily cloud, and I also noticed that the Russell busted out of the daily cloud here. Now the Nasdaq, with all the Momo it had, it was up here still. It was way above the cloud. Nasdaq last year was Nasdaq's year, ridiculously so. So the Nasdaq, in my opinion, getting long the Nasdaq is probably not the best trade. And I actually saw a segment on Tasty Trade about this, and I completely agree. Just based on how ridiculously strong, the leaders of the market all came out of the Nasdaq. And you have Amazon going up 150%, and to go long a stock that's up 150% is just ridiculous to me when there's so much more action to the downside. Let's just look at Amazon. I actually called this gap fill and cloud test in my watch list that I put out a couple weeks ago, or a few weeks ago now. I haven't made another one of those, but I actually was like, the risk reward at this point in Amazon is completely biased to the downside. Just based on this gap and based on how overextended we are. You can see RSI overextended right there. I actually recommended some longer term puts in that watch list, and you would have had about 150 point move based on that. I can't imagine how many bags that would have been in a long term put position, but it would have been a lot. And based on the cloud, you could have grabbed some calls here, and you would be up quite a bit already. So use the cloud, guys. I recommend it. And I actually haven't looked at this chart. I'm looking at it lately, but for a while I didn't watch it. I wasn't keeping track of it because I was just trading ES for the most part and looking at oil and stuff like that. So I haven't really been looking at individual tickers as much. But I looked at this the past couple days, and I was like, wow, I really nailed that, and I wasn't expecting. I'm not necessarily a market forecaster or some sort of analyst or anything like that, but to see that actually come to fruition is pretty cool. So I just thought I'd throw that in there. So when I saw the Dow and the Russell poking through, for me that was a red flag because they hadn't done that since I think the entirety of the bull market, especially not two of the major indices. So I got short, and I got rid of all of my long positions, and then I reestablished some during the second retest of the correction. So it's a little interesting sort of basis arbitrage, I guess you would call it. Pairs arbitrage, however you want to label it. I just thought it was interesting. So those are my thoughts going into this week. It's not a short week, thank God. Looking for a retest of this cloud. Looking for a retest of both the 1 hour channel that I drew. I draw every time. I have to draw it again. Retest of the channel and the cloud here. So mid 1850s. first target's going to be to get long is 1878 to 1880. Although once we start trading, the cloud may be somewhere over there. So primary target around 1880, let's say that, and secondary to get long is 1850s, mid 1850s. So if you have any questions, let me know. Shoot me an email at swissmadetrades@gmail.com. Try to make this video not too long. You can find me on Twitter at swissmadetrades. So good luck, guys. It's a longer week, so hopefully make some more money this week. Take it easy. Also, one thing I forgot to say about this week, I mentioned it, but I didn't say what our expectations would be going into it. It's the Wednesday FOMC interest rate decision. Now, what they've done the past two meetings is the past meeting and then the beige book and all that good stuff, is they've been consistent with their decision to raise interest rates. Now, there were some members who were on the fence about it, but in the end, they all agreed to it. So those members that were on the fence about it going forward, you would have to think that they're going to be on the fence about the March hike, although they expressed confidence in a March hike, and it's still two months away anyway. So what we're going to look for in the language of the FOMC is, if they stay consistent, then investor confidence in what the Fed says may cause the market to rally a little bit, or the reality could be, oh shit, they're going to raise rates again in March, 25 basis points probably, and that's not good. It's actually not that terrible, but it just depends on how the market reacts. Now, as far as an actionable trade going into the FOMC, big money, smart money does not trade. They don't hold positions into uncertain events. Now, what does that mean? You're never going to see, the top hedge fund guys holding a stock or holding a derivative of a stock, an option or anything, through an earnings report or through the electronic conferences they have, etc. I know Netflix just had a big one. You'll see them trading before, close their positions going into it, and then trade after. You won't see them holding any positions through it. So what you're going to see, what you would expect to see, what's worked well for the past 2 years is whenever an FOMC meeting comes, you expect a sell-off into the meeting. So keep that in mind. If we haven't tested the cloud, the 1 hour cloud yet, like we discussed, definitely keep that in mind as the possible opportunity for us to go ahead and move towards it. If we keep rallying Monday and Tuesday and we haven't pulled back yet, Wednesday, the FOMC, big money is going to pull their money out of the market and wait to see what the Fed says, because you don't know what they're going to say. It's a gamble to just hold through an event like that. You might have an idea, but you just don't know. And big money is more careful than anybody else, and you're going to see money come back out of the market. So you would expect a sell-off going into the FOMC decision and the meeting and all that good stuff. So just something to keep in the back of your mind. That should probably be at the front of your mind up until it actually happens. So Monday, Tuesday, and on Wednesday, this should be in the front of your mind, like, oh yeah, FOMC on Wednesday. So don't get too committed to bull if we continue rallying. Expect that sell-off. I just completely forgot to mention that in the video, so don't mind this extra little terribly edited part. So good luck, guys. Sorry about that.